Hi everyone, this is YMP TV and we're now on episode 13. We've been doing quite a few of those interviews just to hear throughout the pandemic how mining executives are experiencing and what are their thoughts on the sector and what's coming up. So today we have Douglas Silver, portfolio manager at Orion Resource Partner. Thank you, Douglas, for joining us.
My pleasure.
So I'm going to start with the first question. How has COVID-19 affected the private equity side in the mining sector?
You know, it's impacted us in a couple different ways. First of all, we had a lot of deals going on, and they all got suspended while people figure out what the new world looks like. At the same time, we have a lot of new deals of people who are trying to raise money either because they're low on working capital or all of a sudden they're on our radar screen. So it's been quite a diverse response. I think that's the biggest thing. The other thing too is, as you know, if you talk to anybody who's a CEO of a public company, fundraising is very difficult right now because you can't travel, you can't do face-to-face. People are using these sorts of media outlets as a way of conducting business. But there's still a lot of value to meeting somebody one-on-one, and it's having a negative impact. One of the areas that we in the mining sector suffer from is when we want to invest money in a mine, we have to go visit the mine site. Well, we can't do that now. So how do we do our due diligence when we can't go on site? And it's very challenging.
I bet. And with the current monetary policy that we are observing, whether it's quantitative easing, lower interest rates, do you expect an increase in the demand for gold and gold prices in the coming months?
I have to tell you, I'll be the only mining person you talk to who's not a gold bug. I think the gold bugs have been spinning a story for a long time about gold's going to take off. And given the current state of the global economy, by their theories, gold should be at $5,000 an ounce, and it isn't. And the question is, why isn't it? Gold loves misery, and these are about as miserable times as I've ever had. And the reason is a lot of it trades as a currency, not as a commodity. And so a lot of the arguments I think the gold bugs make have not stood the test of reality. So I think gold is fine where it is. I like it going up. Obviously, I'm not going to say I want it to go down, but I don't think it needs to go to $2,000 an ounce. And I think if you look at where the price is today, it reflects exactly what the world really thinks gold is worth versus what the gold bugs say.
And with the current crisis, we've seen mines and refiners shutting down. What is the outlook, you think, for the supply and demand of precious metal?
Well, for precious metals, the refineries are the problem. One of the big refineries closed down, and the very large mining companies have multiple arrangements with multiple refineries. So they just shift where they send their gold to get refined. I think the bigger problem is one of transport. How do you move your gold, particularly if it's in a concentrate going to a smelter? How do you move it to the smelter with the ports being, reduced capacity, transportation being severely limited? I think that's probably a bigger issue than actually the refineries or smelters closing down.
And do you think the mining industry or mining companies will operate differently in a post-COVID world?
I think everybody's going to behave differently. I don't think we have a choice. Fortunately, most mines are in fairly remote places. So it's easier to contain the mine site because you can control the ingress and egress from the mine site. I think that we'll use computers a lot more. We'll do telecommunications a lot more. Yeah, there will be a number of changes that will occur at the mine site. Most of it, I think, will be changing behavior as opposed to changing your entire cost structure. The only exception to that is, and we saw this, I did a big research project for a mining company after 9/11, looking at the impact of 9/11 on the mining industry. And we're going to see the same impacts here, which is because ports and transportation are the weakest link in the supply chain. people are going to have larger inventories on site. And so what does that mean? Well, it means more of their money is going into just keeping parts and consumables on site. Where does that money come from? And normally what you'll see is a reduction in mineral exploration because it's considered risky, and they'll divert that money into inventory on site. So that will be one change. One thing I'm watching, which I think might be fascinating, is whether the coronavirus and its impact on the mining industry is going to create an acceleration in the use of 3D printing to produce products at mine site. Think about it. I need a so-and-so part, and you hit your 3D printer and it prints you one out. That might be one of the revolutionary things we see come out of this pandemic.
And do you think streaming and royalties company will do better during and maybe post COVID-19?
Yes and no. Yes, in the sense that right now there's literally hundreds and hundreds of $billions of capital needed to maintain the existing mines just to meet current demand. So the big banks have really withdrawn since 2009 from providing financing. It's one of the reasons private equity has exploded, so to speak, in terms of being financiers of choice. We're trying to fill that gap. But if you take the entire the mining private equity world, you're maybe talking about $20 billion in a world that needs hundreds of billions of dollars. So the other group would be the royalty and streaming companies, who are basically public private equity funds. I mean, they're third-party financiers. They're not trying to necessarily own a piece of the mine, but they are trying to get a piece of the action. So I think it'd be a very fertile time for both the public royalty and streaming companies and for the private equity companies.
And do you think we'll see more M&A and consolidation in the market in the months or maybe the year to come?
I think it really depends on how the economy rebounds, if it does at all. Normally, M&A activity picks up when you're in a bull market. And I don't personally think we're going to be in a bull market for a couple of years. I think things are going to get a lot worse before they get better. So you may see consolidations in the idea that one company which has a reasonable asset got the timing wrong on raising money for working capital. So the merger is forced because they need working capital in a market that's not investing. You might see a lot of that kind of activity, but you know, the M&A bull market we saw right before the crash, those normally occur at the top of the market because it's easier to raise money to buy things. It's very hard to raise money to buy things at the bottom of the market, which an economist would tell you is the time you should be buying. But the markets in reality actually work in reverse. So I think M&A activity, unless somebody becomes a distressed person because they can't raise working capital, I don't think it's going to pick up noticeably.
I guess a bit on the same topic, but do you think that as a result of the current crisis, we'll see more alternative mining, like mining financing, creating value for junior, like in the junior space?
Are you saying, will private equity work more in the junior space?
Yeah, like kind of, yeah, those alternative funds, like, do you think we'll see more? No?
No, and it goes to who our investors are. Our investors tend to be, very large government pension plans, charities, hospitals, foundations, groups that they're risk adverse. So why would they want us speculating with their money? They would rather us be really prudent and only cherry pick the lowest risk, best returning assets. So no, I don't see that. I mean, RCF has built a small exploration fund. Because they've already had it launched, they might be able to expand it if there are investors who want to get into the exploration right now. But when you have the risk of the collapse of a global economy and the risk of failure in exploration, they tend not to go together too well.
Do you think there are currently interesting opportunities in the market or not so much?
Well, there's always interesting opportunities in the market. That's why we all love our jobs. Every day we get to look at new and interesting things and decide whether they're worthy. I think right now for the next 3 to 6 months, understanding what the new normal is going to be far more directional as to what the opportunity set is. And for instance, you know, the U.S. federal government has just increased its national debt by more than 50%. What does that mean to the global economy? The media is not talking about it. People aren't talking about it. And I think people need to talk about it. I think the whole post-pandemic consumer behavior needs to analyze in a lot more depth than it's getting from anybody right now. Even the investment banks who are always putting out stuff that you can read, nobody's really talking about what the consumer is going to do. But just think about it. You've been stuck in your house for the last 2 months. You lost your job. You've drained your savings. And what, now when the pandemic's over and Trump says we can all go back to work, you're going to go out and buy a new car? No, you've just learned a very horrible lesson about why you should have saved more and spent less. You're going to be really cautious about your future spending habits. In the U.S., the common consumer is 70% of the GDP. What do you think is going to happen? Nothing's going to happen. Everybody's going to have a wait and see attitude until it's so. That impacts the supply and demand picture. You saw what happened in oil. You know, to me, that's the first domino of the global crisis, economic crisis we're getting ready to enter into. And it goes so much farther. You should do a whole broadcast on how society's behavior is going to change as a consequence of everybody being locked up in their houses for 2 months, working out of their homes, and finding it's not a bad lifestyle. Like you. I mean, yeah, you need some art on your wall, but other than that, working at home.
Yeah, it's not too bad.
Do you really need to go to a big fancy commercial office every day? No. So if others think that, then what's going to happen to commercial real estate and vacancy rates? If the consumer's not buying, what's going to happen to home building? If we can all work out of our homes, I mean, I just got a check from my car insurance company. They're giving us rebates because they know nobody's driving. Well, if nobody's driving, then they don't need cars. If they don't need cars, then they don't need metal. I mean, there's a whole lot of things that we don't know, and they're so large in terms of their impact on our lives, on the global economy, that to predict where the opportunities are right now, it's probably not a wise thing to do.
And Douglas, before I end this, we end this interview, is there any last piece of advice you would give to investors, and including our millennial members that are listening and watching?
Well, I think it goes back to your last question, which is, where are the opportunities?
Yeah.
And if I was an investor, and I can say this because I am an investor, if I was an investor, I would spend a heck of a lot of time right now reading everything and anything you can get your hands on about not only the science behind what's happening to the economy, but also, if you're looking for opportunities, where do you look? And again, my last comment, I've been thinking about this a lot because I have to think about it in terms of metals. And if we have this societal evolution into home offices being an acceptable workplace or a preferred workplace, the ramifications are huge. Just look at the reports this morning on Netflix earnings. You know, everybody's binge watching, right? Because they're home. Look at things like Home Depot and people who are traditionally would use the kitchen as their office, and now they're going to have a fully dedicated room. Look what happens to house design. Are the residential developers now going to remodel their houses so everybody has a true office? What about things like the internet? I've not seen any article yet, but I can't believe that the internet hasn't been overloaded with everybody switching to personal use as opposed to business use. All of that stuff needs to be assessed, and from that you can find your opportunity. And that's what I've been doing. I've been sort of compiling a list of things that I've noticed that have changed. And one of the things that's really interesting is me. I just turned 65 yesterday, so I'm officially old now, and I'm allowed to make jokes about your age. That's an entitlement we get along with Social Security.
Good enough.
But a lot of the behaviors of millennials that us old people don't like are now actually becoming mainstream. I have a son who doesn't use cash. He uses credit cards for everything. He's a true millennial. He uses Uber if he wants to go out and party rather than driving his car. A lot of his lifestyle things just really throw me. And now that I've had to live that way for 2 months, it's not a bad change in society. So I'm spending a lot of time, one, as an old guy, trying to understand your generation's mentality. Well, at the same time, I'm getting direct education because I've been living at my house for 2 months and living on the internet and Zoom. You know, it's a very interesting time. But to get serious about it, the one argument I always make about the mining industry is that we've done, well, up until the pandemic, we've done nothing to reduce the human population on this planet. So we are always going to have a greater and a greater demand for metals. And that demand shifts between which commodity is the most important. But there's always going to be this. And the problem is that creating supply is an inelastic activity. It takes years. It takes years to get supply created. Yet, as you know, because you watch the markets like everybody else, the demand can change overnight. And so this conflict between elastic and inelasticity creates these huge gaps in which commodity is in short supply. Very seldom does it ever tell you which commodity is in oversupply, but it'll tell you which commodity is undersupply. And those are the commodities you really need to think about. And right now, my favorite commodity, I think copper, has been grossly underloved because it's used in so many different things. We live in an electronic era. You look at the stock market when it was taking off the last couple of years, it was the FANG companies. All those FANG companies are technology driven. All technology is driven with copper and optic fibers and stuff like that. Copper's been unloved. There's 7 times more copper used in an EV vehicle than in a fossil fuel vehicle. So, with Larry Fink announcing at Davos that he's going to create ESG as part of his thing, EV vehicles are going to have a big push. Well, that's great. That's great for copper, but copper prices don't reflect it. So I think you have to sort of work through what is the issue right now that has changed so much from 3 months ago or from last year, and what is the impact of that issue on which commodity? And that's what we spend a lot of our time doing. One other comment about private equity, because I think it's important, which is this economic situation we're in has created a real need for financiers to get innovative. You can't do things the old way because the economic background that you're doing these investments has changed so radically. So a number of us and my firm and other PE people I know, we're all spending a lot of time scratching our heads trying to get creative on new ways to provide financing that doesn't blow up the capital structure of the counterparty, allows them to create whatever product they want to create, and yet us also make the returns that we're required for our investors. That's actually really fun because it's so intellectually stimulating to say, okay, everybody's always done it this way, but the world isn't this way anymore. How do we change? How do we get more creative? And so for investors who follow the mining PE world, it'll be very interesting over the next year to see what new financing vehicles we create or what new investment structures we create. And hopefully it benefits our counterparties. I mean, it doesn't make any sense to give them an investment type that blows their company up. So we're working really hard on trying to rethink the whole issue of mine finance, and not only how do you do it when you can't do mine sites, but also new structures, new innovative, creative ways to make money for our investors and for our counterparties. So those would be my 2 parting things.
Very interesting, Douglas. Thank you so much for your time and speaking to us. I mean, it's good to hear a different perspective and where people are on the market. For those listening, you know that since I've been starting recording those podcasts, YMP has been donating to United Greater Way in Greater Toronto, and I'll provide more information on our website, so you'll get more a sense of what we're trying to do other than just inform you. Thank you, Douglas, again, and please stay safe.
I will. And everybody help those less fortunate.
Absolutely. Thank you.
Thank you.